Good Saturday morning to you, and welcome to On the Mark, alongside Mark Pappa. I'm Gary Byron. Mark is with Financial Resources Group out of Glastonbury, Connecticut. You can find them online at www.frplan.com. That's F as in Frank, rplan.com. And write this phone number down. I want you to call it. If you need to call it right now, so be it. But I don't want you to miss anything on this episode. If you want to call them at the conclusion of this show, or call them later on today, or call them on Monday or anytime next week, just make it a point to call them. It'll be one of the best calls that you've made for yourself. And I mean that wholeheartedly. 860-657-8380. Once again, 860-657-8380. Good morning, Mark.
Hey, good morning, Gary. How are you?
I am doing well. I've been waiting to see you this morning. I've been waiting to see you because you've been on my mind. You, my friend, had a big seminar a few days ago. I think it was on Tuesday, October 7th, over at Ruth Chris Steakhouse, right?
Yep.
And you've done this in the past. I remember you talking about one you had in September where more people than showed up than you thought. You had an overflow room. And you got another one coming up, I believe, on Tuesday, the 28th of October.
Yes.
Same place, same time, 6 o'clock, Ruth Chris Steakhouse, Berlin Turnpike, Newington. But you just had one October 7th. How did that go?
Yeah, very well, Gary. Full house, very informative and good response. So, you have to, if you look at some of the things we talk about on our mailer, people are saying to me, Mark, I get these things all the time in the mail. They just go in the garbage. But I opened yours, and I just, really caught my eye. And these are things that aren't being talked about. And the 6 chain reactions, like the last episode, that's something very commonly being talked about. So we want to make sure we're talking about the things that need to be talked about, but aren't often being talked about. And that's what the Roth Blueprint will without a doubt get people to fully understand at a high level and understand that those are things that need to be addressed, and they're not being addressed in their plan. So they love it.
I'm happy to hear that. And your next one will be on Tuesday, October 28th, 6 p.m., Ruth Chris Steakhouse, Berlin Turnpike in Newington. But they've got to sign up for it, right?
Yes. And then, again, if the demographics work and the mailing works, I'm going to probably just continue that. I may have to go to a different place sometime just to kind of move around a little bit, but I'm pretty happy there. And, sometimes you just you need to move the demographic a little, to maybe 30 minutes away or something like that. But I want to stay within our office because I think everybody in the Metro Hartford area who we're targeting, I think the furthest people I brought in are from Canton. So I'd say that demographic, if you're in the Hartford proper, or even parts of Litchfield County, even parts of Wallingford, whatever, it is worth the 35-minute or 40-minute trip to Ruth Chris. It's worth that trip to my office, or I can come see you too. But it is absolutely worth your time to make those trips to come see us, because this is very, very powerful information, and it is information that everybody needs to know. And I feel people who go to these seminars, you could stop going to seminars once you come to mine, and you come on board with me, and we do a full checklist and a Roth Blueprint. There's not much more you're going to need to do other than enjoy your life, enjoy your grandkids, enjoy your travels, enjoy your beach house, whatever you need to do. Enjoy your second home in South Carolina, which I'm hearing a lot about. You're not going to need to do anything more. You're not going to need to go to these crazy seminars that, have one little bullet point or one little nugget of information. We're going to fill the bucket for you. In fact, we're not going to fill it, where it's going to be overflowing. And that's what you want.
I love it. You want to give that number one more time so that they want to sign up for it?
Sure.
It's Tuesday, the 28th of October.
Yep, it's 877-690-6689.
Perfect. We will repeat all points of contact as well as that phone number for the seminar that Mark is going to be performing once again on Tuesday, the 28th.
And if it gets too full, we're going to add some more dates too. So I can always add another date. So let's say the 28th fills up.
Yeah.
And, what I can do is I can go another week out in November. And, I try not to do much in November because everyone's getting, holiday time and Thanksgiving's coming up and people are
do
making
one
their
right
plans,
before Thanksgiving and then do the next one in January or something like that.
Yeah, I could probably do that. Well, January will definitely be on the list, so we'll talk about that later.
So everybody's been talking about this AI spending spree. Is it a bubble? And, of course, there's, hyperscalers like Meta and Oracle and so on and so forth. Now, Citi's projecting $490 billion in infrastructure spent next year alone. And OpenAI's in this massive Stargate joint venture with SoftBank and Oracle. They're eyeing $500 billion for U.S. AI builds. Nvidia, they're reportedly paying up to like $100 billion for OpenAI. And so are we in a full tulip mania mode here, or is this the foundation of the next tech revolution, Mark?
Gary, I want you to. I was just sitting down at lunch with a friend, so a colleague of mine, and who I see there all the time. And if someone tasked you, remember that show Brewster's Millions? Remember he had to spend.
Was that Richard Pryor?
Richard
right?
Pryor,
Yeah.
and back then, and he had to spend the money, and they kept making it so he couldn't spend. It was like $10 million
Yes.
he had to spend, and if he didn't spend it,
in like one day, I don't know, something crazy, yeah,
something crazy. I mean, I couldn't even begin to fathom. What would you do with $500 billion? Okay. Now, $500 million. Now, you see these houses for sale, like, largest mansion in the country for sale for $250 million. So you need some maybe Saudi billionaire or, a tech billionaire to buy that place. But we're talking $500 billion. That's just OpenAI.
$500 billion.
$500 billion. That's data centers, that's power. I mean, that's software, that's chips. I mean, it is an insane amount of money. And I couldn't even begin to figure out how to implement that spend, And I mean, I guess OpenAI has it figured out. But I mean, they're literally looking to automate everything. And it's a little scary because, even NVIDIA ponying up $100 billion just for OpenAI as an investment. Where's the future? Now, NVIDIA just hit, $4.5 trillion in market cap, and it's flush with cash. So it has money to spend. But just think about how insane these dollars are. We talk about $37 trillion in debt. I mean, they're just numbers to us, right? But still, $100 billion, if someone says you have $100 billion to spend, what do you do with that?
A billion is incredible. I can't even fathom a billion.
Yeah.
$100 billion?
Right.
I guess would you invest in a sports franchise? I don't know. I mean, that's crazy money.
Yeah, it really is. It's a serious amount of money. So what I'm afraid of a little bit is that the headlines are ahead of the reality. Mm-hmm. Although there's money being made on some of this, AI and different things. It's being, they're profitable companies. Microsoft, Meta, they're very, very big, profitable companies. I just have a feeling you get the sense that we are ahead of our skis, per se. Mm-hmm. And I've actually turned a little bit bearish on this whole trade because it has been carrying the market. If you look at, the gross domestic product of the United States, a good chunk of that has been, this AI spend. And the overall underlying economy isn't all that hot. If you take a look at, we're coming off of old administration and new administration. We have a much different world with the Trump administration, where we have tariffs and different trade deals that are going on, and Trump likes to do these one-off transactions. We don't know how that's really going to pan out. I mean, we want to be optimistic, but we're also trying to restrict some of our government spending on things. So it's hard to say how far ahead we are or how far behind we are, but it's a little scary knowing that these 7 companies, as I mentioned many times in the past, have been driving the market. 40% of the S&P 500 is 10 stocks, and 9 of them are technology stocks. These hyperscaler type companies. So it's not unfair to say that we could have some potential froth, Gary. Well, and not unfair to say that it's time to be cautious, right? It's time to say, hey, wait a minute, I need to take some money out of this trade. It's been a good winter. It's done well for me. And this is what I'm going to be talking to my clients about. Let's pull some money off the table. Mm-hmm. You never go broke taking a profit. And let's reposition that money in some assets that are safer. And you know what? If we get a pullback, which I'm predicting we do, and I'm not here to predict the market, but at some point we're going to see some kind of pullback. and then that's when you can maybe jump back in. But right now, I'm a little bit concerned about what we're seeing here. It's just an insane amount of money.
I saw a commercial last week. It was a human being, AI had created. And I mean, I don't mean a likeness. I mean, you would think that was an actor. Actually, I think it wasn't. They created an actor, and now with the SAG, the Screen Actors Guild, they're all up in an uproar. And you mentioned you had mentioned energy grids. Let's unpack that a little bit. The AI transformation isn't just about chips and servers, right? I mean, it's guzzling power like never before. There's reports from the IEA that say global data centers' electricity could double to 945 terawatt hours by 2030, driven largely by AI. Even Goldman Sachs is forecasting a 165% surge in data center power. There's a lot of water that's actually needed for that. So maybe you could break that down. What a terawatt hour, Mark, means compared to, let's say, a megawatt, which people are more familiar with, or a gigawatt.
Well, here's another point. I used to be on the MDC commission. You bring up water.
Right, I was a commissioner. I remember you were. Yes.
And I wonder if they're thinking about using some part of their reservoir to cool these stations. I just don't think we're going to see many of them built in Connecticut. So you're going to need alternative sources. But it's quite interesting. But yeah, this is a major front-loaded spend. So one other thing I wanted to bring up before we talk about the power is if the ROI doesn't materialize return on investment doesn't materialize in 2 to 3 years, say, and the energy costs spike, or the model hits diminishing returns, we could see a sharp correction. And that's something to think about. The power, I think the lag in this entire trade is going to be the amount of power that we really need. I mean, you mentioned terawatts. I mean, that's, now our power plant here, if you have a local power plant, a 500 megawatt power plant or 750 megawatt power plant, okay, then you go from a megawatt, you go to a gigawatt, okay? And now we're talking terawatts, okay?
I don't even know what
So I think it's like, I don't quote me, I'm not an expert on this. I think it's like 1 billion watts or some crazy number. But I mean, terawatt hours, that's a lot of power, a lot of energy is going to be needed. So what's been also happening, though, is that the energy sector has been benefiting. Anyone that has, potential to make nuclear type reactors and nuclear assets, or some of these, for example, right in our backyard, we have electric boat, right?
Right.
And what powers those submarines?
Nuclear, right?
Nuclear. Oh. So they're using those type of nuclear assets to actually, and they're going to need a lot of them to fund these these data centers. They're reviving they want to revive 3 Mile Island. They want to revive other nuclear assets to bring them back online again. So, I mean, I think, economics drives everything. I don't care what the politics say. Economics drives everything. Right. Yeah. And eventually what happens is the reality sets in. So we went from, everything needs to be green and solar panel and wind. We're going to need every ounce of electricity we can generate just to fund this trade. And again, how hard is it to build a power plant, Gary? What happened even in Connecticut? Did you know the story? You ever hear the stories behind what happened with the NRG was building their plant, or there's that other one in Middletown? Just the permitting alone, the financing alone. And Microsoft, think about this. They can build these data centers because they're like the size of a country. Okay, basically, think about how big they are. And back in the day when they first started building these chip plants, I was listening to CNBC. I can't remember the guy's name. Do you realize that it would take a country's balance sheet? A country. So that's why Taiwan and Singapore were all, in Far East Asia was able to build all those fabs, what they call fabs, which make the chips. Taiwan Semiconductor. That was all funded by governments because it took a government-sized balance sheet to finance that stuff. Okay, that's why you see all those there. Now we have companies that we consider that are offtakes that can just, guarantee payments on these massive data centers. Microsofts and Oracles. You have to be massive, but that's why they're benefiting so much, and they're just blowing up, getting bigger, right? And that's a little scary, But they have such big balance sheets and so much cash that they can act as the ultimate guarantor to build these things. What happens though, again, You can have the greatest backlog in the world, and if the economy tilts or something goes wrong, people start canceling their orders. Right. So again, you have to I'm not saying it's going to happen. What I want to say is if you look at, you mentioned 165% surge in data center power demand. We've got to be I think we have to be cautious. I think we have to keep a close eye on this trade. I think it's incredible. I think it's amazing. I think artificial intelligence will have some good to it. It could have some bad as well. But same time, we'd be wise to be cautious here. Yeah. These are just astronomical numbers. These are numbers that we've never seen before. All right. So we can't rely on it.
But for context, a typical gas powered plant, right? Say a combined cycle natural gas facility,
500 to 800 megawatts.
That's incredible. That's insane.
That's enough for a mid-sized city, right? That could power Hartford's not even Hartford's 330,000 people, roughly, I think.
Is that right?
Just the city itself, yeah. I haven't looked at the demographics in a while, but I don't think it's changed that much. So if you look at the Stargate project with Oracle and NVIDIA alone, it's just not the $500 billion build-out. It's the projected need up to 10 gigawatts of power capacity. And that's 5 to 10 large gas plants running at full tilt, or an annual energy use of 4 million U.S. households, Gary.
Oh,
right. And so IEA
more than the state of Connecticut. It's more.
Right. The International Energy Agency says the 945 terawatt forecast for global data centers by 2030. So buy the big. You want to buy these big companies, but I would also be looking towards the energy sector as well.
Yeah,
it's without a doubt. So, but I want to bring this up because I'm definitely concerned about just this very top heavy problem we have in the market, which is these hyperscalers, these Magnificent Seven type stocks. There's other companies to buy. You can get at much better value. When you build your portfolios like we do, we're looking for those opportunities, not just these top 7 stocks.
Folks, you are listening to On the Mark alongside Mark Pappa. I'm Gary Byron. Mark is the owner of Financial Resources Group in Glastonbury. You can find him online at frplan.com. That's frplan.com. And his phone number, I want to sit down and have a one-on-one with him. There's no obligation. In fact, you're going to get a lot out of it. 860-657-8380. Again, it's 860-657-8380. They're out of Glastonbury. And he's got an event. He just had one on Tuesday, hugely successful. It was to capacity. There's no charge to it. It's a steak dinner over at Ruth Chris Steakhouse on the Berlin Turnpike in Newington. He's having it on. His next one is Tuesday, October 28th, 6 p.m. What's the phone number they need to call to get on that list?
877-690-6689.
There you go. Okay. So I'm listening to all those numbers. It's staggering. It's staggering. 345 TWH, right?
Yeah, we don't want to confuse too many people, but to put it into context here, Gary, McKinsey, which is the big consulting firm,
right?
They're estimating $6.7 trillion globally by 2030 to scale computing power, with a huge chunk for energy infrastructure. So think about new gas plants, wind farms, grid upgrades. NVIDIA's $100 billion for OpenAI also includes billions for power deals that they're going to act probably as guarantors for. And Meta is also planning 10 to 15 billion annually just for artificial intelligence infrastructure. And that also includes securing, gigawatts of power for their models. Their model is called the Llama models, the AI models. So just to train that model alone, these are big utility contracts. So, again, you want to, take a look at, those people who are making products for utilities and nuclear. It isn't a global energy type of investment. It's not a bad way to play this game. It's a piggyback on this, and probably a safer way too. Again, we're not giving investment advice on this, but that's something that I do in my model portfolio. Is we are, without a doubt, piggybacking off the energy as part of this trade as well.
Yeah. Can I shift gears because I've only got about we got a good amount of time left. We got about 7 minutes left, but I don't know if anybody else this is kind of crossed their mind. There's been no real bear market since 2008, 2009. So it's not a matter of if, it's a matter of when. When it occurs, how do you protect yourself from this?
Well, Gary, I think the whole purpose I want to bring this up in this entire in this conversation is that it's been a great ride. We've had a great ride with the Mag 7, Magnificent 7.
Yeah.
Your Nvidias, your Microsofts, your Facebooks, your Alphabets, your Amazons, right? It's been a great ride, and they're all investing heavily into this space. It's just a matter of that. Understand that your risk is great. That these are big companies, but it's a very, very concentrated portfolio. Even if you're sitting in the S&P 500, you have to look elsewhere. And as part of our full checklist review, Gary, one of the things we do is what's called the sale plan. So actually, what I do is I actually sit down with folks and I tell them about this risk versus reward strategy that was created by University of Chicago and NYU. And they'll say if you're an aggressive investor, now you do a bell curve, and I do this little story about people, average age of 70-year-olds ran a race. Some are going to finish, 5% are going to finish in the back, 5% are going to finish in the front, but where's the pack on a bell curve finish? And people will tell me, well, mostly in the middle. So we do this exercise, and then I actually have them tell me where they want to be in the bell. I would say most people, if you took your age, let's say you were 60, according to the study, 70 years old, and you're an aggressive investor, you take your age, you subtract that by 120, by 70. So that means you should have half your money, 50% of your money in risk, which is stocks, right? And then the other half should be in stuff that's safe, right? Depending on how your life, again, since everybody is different and everyone has different needs and desires and risk and money, this is just a guideline. I tell them it is not in absolutes, not concrete, but you should have a good idea where you might fall. And if you're a moderate investor, you take your age minus 110 and you were 70, then you would say, okay, well, I'd have 40% of my money in the market in stocks and then the rest, right? And if you're conservative, it'd be 30. So, I think a lot of people are more conservative, which is fine. I just think they need to be educated a little more, and they're afraid. They don't have enough of safe, they don't know how to position their safe assets in order to benefit from growth. But when we do this exercise, what we normally find out is people will say, well, gee, I'm only supposed to have 50% of my money in the market at this stage, right, based on this study, University of Chicago and NYU. I'm not saying it's the only study out there, but it's pretty reliable. And then they'll find out that 90% of the money's at risk. I'll say, well, wow. And I'll ask them, why was that never shown to you? And then you realize that their advisor's making a fee on that 90%. Okay, so then you ask yourself, gee, well, why is he taking so much risk? Did you tell him you wanted that much risk? No, we didn't say that. Okay, but why do you think that's happening? Well, it's telling you because he just wants to make money. And that's the answer. So, I want to bring this to people's attention. I'm sounding the alarm bells just because there's a lot that can go wrong. And it doesn't take much that can go wrong to pop this trade. Whether, again, I mentioned DeepSeek earlier, the Chinese AI. If they can have the cost, right, and they can cut the cost in half to actually, per unit of whatever they're doing, that is going to make it so that you don't need you maybe instead of a football field's nothing compared to these data centers now. They're talking acres, farms.
I want to bring AI back into this because now I am running out of time. If someone's listening to this right now, particularly a retiree, Mark, why should they diversify? Why should specifically a retiree diversify in an overvalued market? And let's bring AI into it and kind of circle back. Does this AI energy surge add just another layer to this risk?
Yeah, I would say so. I would say half the people don't realize that they're not diversified. I've seen people with 10, 11, 12 different mutual funds in their account, and all the funds are doing the same thing. All the fund managers own similar stocks, highly correlated to each other. So that's something that needs to be taken a look at. So what we do is we do a stress test on your portfolio. Okay. We use a third party called Morningstar. And again, I use third party because is it my opinion or whose? Right? Somebody else's. So.
Somebody independent.
Yeah, somebody totally impartial body. So it's not mine. But I also just want to bring up, I lived through, I saw, we saw the crash of 87. That scared a lot of people. But we haven't, when was the last time we had a real bear market? And that was 2008, 2009.
Right, 9, yeah.
That was ugly. That was a nasty, nasty, ugly dark period that I didn't, but I had also lived through 2000, 2001, all the way to 2000. We didn't see the market rebound to 2003. We saw 2000 to 2010, the stock market's actual rate of return was less than 1%. So we had a lost decade. So we haven't seen that in a bit. So, yeah, did we see a sell-off when Trump announced the tariffs? And, yeah, that scared people. Was there a sell-off in COVID? Did that scare people? Not really. I mean, yeah, so the market dropped roughly 30%, I think, during the COVID crash. And then all of a sudden the Fed said, okay, well, let's just unleash and print a whole bunch of money and, take over. And remember, the Fed and the Treasury merged. I mean, so many crazy things happened, and they started buying stocks. It's insane. So that's not something that used to happen. We're not used to. We don't know what the next bear market's going to look like. But I'm just saying the possibility for a big sell-off is there. So you need to get yourself protected.
The best way to get yourself protected is taking that first step, and that would be with meeting with Mark Pappa. You can do this a couple of different ways. You can head online to his website for Financial Resources Group. Financial Resources Group out of Glastonbury, Connecticut, by the way. Find them online at FRPlan, F as in Frank, frplan.com. Or just calling him and scheduling a no-obligation consultation. Believe me, you're going to get a lot from this, and it's not going to cost you anything. 860-657-8380. 860-657-8380. As a matter of fact, it's like a $100 gift card. I think you can, gas card, gift card that you get from it. But before I close up and wrap things up, just take 30 seconds. Talk about this event you're having. Once again, you just had it this past Tuesday. Your next one is on Tuesday, October 28th. It's at Ruth Chris Steakhouse, Berlin Turnpike in Newington. Starts at 6 o'clock. You're giving a seminar. Take 20 seconds.
Yes, and that can't be combined with the $100 gift card, by the way. I can't give away that. So when you look at what it costs per table,
sure.
It would exceed the amount I can gift by compliance.
So how do they sign up for this?
Yeah, they will sign up by dialing 877-690-6689.
Repeat that.
877-690-6689.
There you go.
And if you get on the wait list, I'm just going to be hosting more events. We'll get you in there eventually.
Very well.
Or come in for a personalized one. I'll bring you in personalized. If you get waitlisted and you don't want to wait, give us a call at the office, and we'll get you into the office, and I'll do it.
And that number at the office is 860-657-8380. All right, for Mark Pappa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.